Hello guys, welcome to this video. Today I will be showing you our free model, which is absolutely insane and can reach over 90% win rate. If you want to learn more about ICT or models or anything and that kind of thing, or psychology or anything, join our Discord. We just opened our membership yesterday, so you can join that now. Just go to tradersite.com, join right here. You can also join our affiliate program. We do 25% forever. To start out, I'll go over checklists here, over what you need, and then I'll be showing you some examples. As for the model, starting with time alignment, here is what you need for time. You want to be looking at setups from 10 a.m. to 10:15 a.m. all New York time, of course. And here you can see the range, which you will be looking for an entry in. So the second part of the strategy is open high low close or open low high close. If you don't know what this is a really important concept as for ICT. It's how you predict how the candle will form. So here I have two examples. I have a bullish candle and a bearish candle. So on the bullish candle you can see we have an open, we have a low, and then we have a high, and then we have a close. This means on the low time frame we open up, then we manipulate down, then we pump up, make the high, and then we go down again to make the close of the candle. If you can imagine this, I'll also show you on the chart later. Okay, so as for the bearish candle, it's opposite. We open higher, and then we move up to make a high, and then we dump to make a low, and then we close higher. Okay, so if you understand this is decently simple, but this is very, very, very important for the strategy, okay? Okay, here is an example of the hourly, 4-hour, or daily time frame, because what you need to know is that it's all fractal. The time frame does not really matter. It just matters how much you want to target and stuff. So if you can manage your risk and manage your targets perfectly, you could be trading this on the 15-minute, you could be trading this on the 1 minute, you can be trading this on any time frame, okay? What I have here is that we mark out a key level or area. This could be any higher time frame PD rate. This could be a CSD, inverse, anything you're looking for, okay? Could be a failure gap, and then you want to see it go up in there, and up at the wick, the top wick. That's where we want to see our model form, okay? That's where we want to see our model form. Okay, so now for the last part of the strategy, our entry model. So do you see the high up there? That's the same high we just saw in the hourly candle, okay? So that high is the one that gets hit into the failure gap or whatever it is we're looking for. And then we have a bullish failure gap which gets ran through, turned into inverse failure gap, and then you see the bearish candle, the second bearish candle, manipulates up into the inverse, and then we dump below open, okay? So here it is very important to note that the open, as you can see, this is our open high low close on the low time frame, okay? Let's say this was, I don't know, a 5-minute candle that opens down here and then manipulates up, makes a high up here, makes the inverse, and then dumps, okay? That you can use that too, okay? That's not dumb, that's perfect. Okay, so now I'll be going over some examples to show you exactly what this strategy is about, okay? Okay guys, so for the first example, I'll show you this, which happened on Friday. So this Friday, okay? So at 10 a.m. we opened up, right? What happened? 10 a.m. push down, and that means we have our open and we have our low. So when we push down, what are we looking for? We're looking for some key levels, some key things that are happening, some key things that are happening right now. And what happened? Because we're on low time frame and this is like at open and we already pushed up. This is not like the low of the day, meaning we don't need the hourly PD rate because we had this down here. So what we can actually just do, we can look at, for example, this low gets swept in this failure gap, and what do we have then? We have this inverse, and we have SMT with this low, which is also great confirmation for the model. And then we have an inverse, we push up, make an inverse, and here's when we enter. Guys, this might not be a prime example of the model, okay? This might not be a prime example. I want to be transparent with you guys. I don't want to be trying to make it something it's not. And so I'll just show you an example that literally happened fucking last Friday, okay? Last time the markets were open, this happened. This right here. You could have caught this with no doubt, no anything, no. It was a free trade, and you could have targeted anywhere. I wasn't from lower, so I only targeted this high. But you could have easily targeted Asia. That was my original target. I just moved it a bit because I was like, it was too slow, okay? You could have easily targeted Asia and made 7 RR, okay? It may not happen every day, okay? But it is extremely good. So when you see this happening, it is free. This is free money, okay? Take it. And yeah, this model is incredibly great. So yeah, hope to see you in the Discord, maybe in the membership. Goodbye.